Let's have a chat with Brenton. Let's have a chat with Brenton. Do you have platinum in your wallet?
I do.
There you go. There we've got it. Well done, Brenton. Right answer. Alrighty, let's talk about this. I noticed from your research, I wanted to kick off straight away with palladium because I know this is your preference over platinum. However, I also noticed that when we look at the 12 months change, palladium has been year to date and also over the past 12 months one of the better performing metals, certainly out of platinum, silver, gold and palladium. But this is still your top pick, right? You're still most bullish on this particular metal.
Yeah, look, I mean, to distill it down, the demand for all of these industrial metals is really a growth play. If growth falters, all of these metals will get hurt. But platinum, palladium, the PGMs collectively have a very strong case to be made for the fact that they benefit not only from growing auto volumes, but also from tightening emission legislation. So that means that the amount of pollutants any car is allowed to emit is diminishing over time. And one of the only ways that you can comply with tightening emission legislation in autos or in internal combustion engines is through the use of higher loadings of platinum group metals in those autocats. So it's benefiting not only from a potential growth in autos, but also from a tightening emission legislation, which is very much a green theme. It's an emission theme, and it's a very structural thing. It's legislated. It's not just a consumer-driven thing. And
so why is this necessarily more palladium-focused than platinum? Because, of course, platinum is also used in this auto cycle.
Correct. All three of the major PGMs are predominantly used in autocats, and that's platinum, palladium, and rhodium. Palladium is more suited to petrol catalysis. It is also cheaper. It can also substitute platinum for a large component of the uses in particularly petrol catalysis. And China, the biggest growth market in vehicles globally, has a much greater predisposition towards palladium. One, because they use more petrol cars, and two, because it's cheaper. Whereas a lot of the US and European firms still have a greater disposition towards platinum, partly for legacy reasons related to the fact that there has been volatile supply of palladium historically, given that previously some of the Russian state bureaus controlled a very large portion of the marginal supply of palladium, and that caused an enormous price spike in 2001 when palladium went to over $1,200 an ounce. So there's some reticence from some of the Western-based consumers to prefer palladium over platinum, quite simply because of the security of supply issue.
Brenton, good morning. It's Adam Buckley at the SGX studio. I want to get your take on this in terms of where prices may go. The brokerage firm CPM are saying 2,000 by 2014 because of the tight supplies. Are you in agreement with that? And then the second part to my question is the big theory that if we do see an appreciation in the yuan over the US dollar, that's going to stoke further demand and inflate prices even further with these precious metals. Do you agree with that as well?
Yeah, the latter is easy. That same is true for all basic materials, and especially in industrial metals. But platinum specifically, 2,000 is quite easily achievable, and I think for palladium we could happily see 800-900 over the same time frame. Bearing in mind that they've both been at those levels historically, but more importantly, the cost of production of these metals is inflating at a compound rate of somewhere in the early teens. Which means that as the cost of extraction increases, so the market clearing price will continue to increase at a dramatically higher rate as well. And remember, these metals really only get produced in two primary domiciles. One is Southern Africa, and the other is Russia.
Let me ask you here, Brenton. We've had all these numbers out from China today, and we've got the Stats Bureau here talking about essentially targeting slowing growth coming out of China. Now, of course, also a lot of, primarily these products are used, as you've been talking about, in the auto space, and China is becoming, or is, one of the world's biggest. Is this not a concern?
Clearly it's a concern, it's an issue at the margin, but I think it has to be seen in the context of the fact that, one, the biggest driver of higher PGM volumes is the change in emission legislation, and secondly, it's the change in the volume of cars. I think we talk about China growth slowing. Let's bear in mind it's still in the double digits, so it's still very high. Consumer growth is still very high, and the offtake in autos is still very high. But the flip side of that is the biggest volume of cars that's consumed in the world is still in the G5, and we have to stabilize that part of the world. before we can get comfortable with a more broad-based growth scenario.
Okay, all right, Brenton, fantastic to have you with us. Thanks for joining us. It certainly is an interesting story there. Brenton Saunders, Director at Taurus Funds Management.